Adventures in Crypto is basically my learning journey. I am learning along with everybody else, and I'm taking everybody with me. There are no answers here. This is not like the macro world where you kind of know how things work and it's deciding which way it's going to go. Is it this path or that path? This is like, it's an unknown future, and we all have to figure it out while sprinting a marathon. So it's immensely hard work. There's incredible amounts of input of new information coming that it's overwhelming us all. So what I'm trying to do is build this framework in my head that allows me to take into account all the things that are happening without having to be an expert on all of them. And I want to be an expert in some of them. So that's how I'm approaching it. This is the fastest adoption of any technology in all recorded history. So the chart you can see on the screen now shows that the internet, back in 1997, when it had 150 million users, was growing at 63% a year. 150 million users in crypto is present day, and it's growing at 113% a year. So this is why it's so hard for us all to catch up, because it's growing at a ridiculous pace, and it's only accelerating. I mean, we've seen in the last year alone the rise of DeFi, NFTs, DAOs, central bank digital currencies, stable coins, you know, in a way that none of us could have expected. It's just happened so fast at such scale, and that's only going to continue. And that's a core philosophy of the exponential age. So the reality is, if we continue this rate of adoption, we should get to an equivalent size asset class in these digital assets. And that would make them worth 200 trillion. We have never, in all of human history, been given an opportunity that an entire asset class, not a stock, not a single token, an entire asset class goes up 100x in value, probably by the end of this decade. So as I've talked about before, this is, I think, the largest distribution of wealth and fastest distribution of wealth in all recorded history. Because unlike most other wealth distributions, things like railroads, phones, even computers, and even the internet, they accrue to giant companies. You can own a small fraction, you can have $10 in it. So everybody can participate in this, right? This is incredible. And this is why I'm so passionate about this space. Is I was driven on a mission after 2008 and 2012, the European crisis, to tell people about the risks and opportunities. I didn't want somebody to come to me and said, why didn't I know? My job, the whole job of Real Vision, is to make sure everybody knows. So I've been banging the table as loudly as possible, saying, look, there are no certainties in this world, but this is the highest probability opportunity I've ever seen, and the biggest magnitude of any opportunity I've ever seen in my entire career or I've ever heard about. So that's the scale, and that's why I am crazy interested in this. And Bitcoin has less applications built on it than Ethereum does, but it has more users. So it's immensely valuable. It has the store of value proposition that most people are familiar with. What is interesting is adoption effects seem to repeat themselves. It seems to be a human behavioral thing. I think there's a couple of things going on that will elongate the cycle. One is everybody is onboarding. The more the price goes up, the more the institutions onboard. Institutions are weird beasts. They tend to operate quarterly. So you come into January, everybody who's got approval is going to start onboarding and allocating January, February, March. So that sell-off from the rebalancing will be bought by the new institutions entering the space as they increase their allocations. Then we've got the other big game in town, which is the fact that Ethereum has no supply. There's about 10 or 11% of all available Ethereum on exchanges. Everything else is locked away in smart contracts, cold storage, DeFi, NFTs, and then staking. Because everybody wants the ETH 2.0 to come, so everybody's staking their ETH for the yield. And that takes it off and locks it away until after that. And then that ETH comes onto the market gradually. So I think the cycle probably goes on till the summer. I think almost certainly till March, but possibly to the summer. which will give us higher prices and a different cycle structure than we've seen before. I could be wrong. I'm not betting the entire ranch on it, but that's how I think it plays out. Ethereum to me remains the best bet in the world from a risk-adjusted standpoint. It may not do the most in price of all, but for a major asset, my guess is it gets pretty close to Bitcoin's market cap. So I think it probably in the end, somewhere doubles in relative valuation versus Bitcoin. I don't think the market quite expects that, but maybe that kind of short period of the flippening would be the end of the cycle. When, you know, everybody punches the air, all the, you know, the Bitcoin guys get pissed off because, you know, Ethereum's outperformed, and then we get a larger correction. But anyway, that's how I see it, and that's a lot of work that I've been writing Global Macro Investor, in Real Vision Pro for Macro Insiders, from speaking to people, understanding the structure from people like, you know, the on-chain analysis from, you know, Will Clement and Willy Woo and others, you know, looking at the technical analysts that we've had on Real Vision, you know, Crypto Sniper, all of these people getting a distillation from Plan B stock to flow. And so I'm forming a whole macro view around the space, the next kind of 6 to 9 months in the space, from all of these kind of conversations that are happening on Real Vision. The first one that I've been trying to figure out is social tokens. That's something that Kevin Kelly, I asked him, because him and I share the same fascination. We think it's going to be literally the disruptor, the big mass market consumer adoption of everything, which right now is NFTs, but I think it's going to be social tokens. So I've asked Kevin to go and research into this, and I've also, you know, been talking to all sorts of people to find out where this is going. And what is making me understand is that culture is becoming the investment. Yat Siu, on his interview, the chairman of Animoca, which was an unbelievable interview, talked about that this could create universal basic equity. So I've been talking in the past about, you know, the ability to have digital identity can give us a chance of having universal basic income, because you can sell your data and identity to platforms that currently just harvest it for free. I think that's coming, but maybe it's not as big as universal basic equity, which means that communities that you're involved with, you have a token in, and if the community is vibrant, then the value of that token rises over time. So your cultural interests align with your investment interests, align with your business interests, align with all of your activities. So it's really early days as people are trying to understand how these tokenized communities can work and how do you actually add value, because it can't be a cash grab. It's got to be a participation. So, you know, I've been going down that journey, understanding the music industry, the media industry, sports teams, all of these things to try and understand, okay, what the hell is coming here? But what I understand is these people have communities that are gigantic. They have to rent their community back off Facebook, Google, and other things. They have no direct relationship with their customer. So if you think of a football club, the football club's direct relationship with the customer really is the 80,000 people who can come to a game on a Saturday. Even the t-shirt sales and stuff like that, they've kind of lost connection. So they have no real connection with these gigantic fan bases. But I think that brand is becoming a tangible asset as opposed to an intangible asset. And the tangibility is the fact that these social tokens and NFTs will reflect that. That's a gigantic change. So what is Man United's brand worth, and does it sit in equity or does it sit in community? I think a lot of it's going to sit in community. So that token to me should be worth a few billion. And that's where I think this is going. So maybe those tokens in the football clubs, if they tokenize in the right way and create the right experiences and create the right community, you can be a fan and make money from being a fan. That applies to musicians and even mega brands. You know, fashion brands particularly, things that have cultural significance. So this is a really huge thing.